JBlog, March 19th, 2011. Big story, of course, is that France, US, and Great Britain have launched attacks against Libya and Gaddafi to enforce the UN resolution. That, of course, will have an immediate reaction on oil prices, whether they go up or down. But it will definitely have an effect on that and potentially further destabilize that area. So keep a close eye on that and see whenever there's uncertainty, the market has a tendency to go into safe assets like the US dollar, the Swiss franc. We'll see how that continues. Along the way, S&P 500's PE ratio is once again at 2317. There was, of course, a drop-off last week and then a rally on Thursday and Friday. I'll get into that in a sec. Looking at the Baltic dry index rate shipping, it has been rising a little bit again, but not very much. So shipping rates are still trying to figure out where they would like to be. The ECRI index has been gaining over the last this year, basically from starting from April and on has been gaining. But now we see a potential topping out here. We'll have to see how that continues, which could spell trouble down the road. This week has, of course, been very interesting due to this dip. Let's actually go straight into the New York Composite. New York Composite, of course, has had, and all of the other stock exchanges have had a dip, pretty strong dip this week. Not unexpected. What's unexpected is that it actually took so long to get here, but has definitely broken this channel to the downside, and much more than back in November, December, when it had a tiny little dip. If we're looking on the monthly, of course, the last significant dip was back in last year. It started in April and then went down for a few weeks, months, and then recovered from there. This current dip that we're in is not nearly as strong as that one. But then this rally has been very consistent, just straight up. So again, this could be nothing. This latest dip here could be nothing. It could be something. Of course, the previous dip was not at $100 oil per barrel, and it also wasn't a year into a quote-unquote recovery that has yet to produce any real jobs. The jobs that are being created are to a large part government jobs, and they are driven very much by liquidity, but the actual unemployment rate is still very low, historically low, and so is the labor participation rate. So even though the numbers seem to look like they're good, they're not even keeping up with the interest in the population. So from that point of view, we should be way further into good news, and there is still not enough good news out there. Considering how much money has been thrown at this, I mean, if you throw what have they thrown at it about now? About $8 trillion officially at this, and really achieved no net benefit from this, but we'll have to start paying interest on that sometime soon. Then that's of course not a very good rate of return. World markets haven't been doing very much. They have been dropping a little bit along for the last couple of weeks, and right now basically things are in a holding pattern. But we did start from some very overbought conditions. Now, overbought, of course, doesn't really matter in a bull market. A bull market will go on. Even if it's overbought, it just becomes more overbought. But sooner or later, obviously, um, this will start to matter. It does not yet look like a top blowout, but there is a lot of headwinds with higher oil, um, and higher resources, and some of that thinking that, oh, this is just going to be a little thing and it's going to blow over. It's just not materializing. Um, a lot of markets look very much the same. This is Chinese exchange, very flat, has been flat for 2 years now. This is the nation that supposedly will save the world, um, and be the new engine, and we have a flat stock market, so that doesn't make a lot of sense really. Growth should be much stronger here. Hong Kong, a bit better than China, but still very, not very strong. Again, considering how much economic activity supposedly goes on there. India, of course, had quite a serious downfall here in the last little while. Um, Again, India depends very much on money printing, lots of inflation there, which of course is unreported. It will drive markets. Japan, of course, being hit by the earthquake and the tsunami, and had a massive drop. And now the world has intervened to sell yen, because a lot of Japanese companies are bringing yen back into Japan to rebuild Japan. Of course, that drives up the yen if you buy so many of them. So other countries are helping by selling yen to try to bring it down. We haven't even started looking at what this actually means, this whole thing. The area that got hit by the earthquake is responsible for 8% of the GDP of Japan. How much of that GDP has been affected, and how that will affect Japanese ability to pay interest on the monies that they've borrowed, plus a quickly aging population. Um, I think it will take several years for this one to play out. Singapore also not looking too great. What's interesting, what I'm seeing now is the 1030, that the 10-day over the 30-day exponential moving average are starting to cross over in several charts. This is actually Singapore. They're actually crossing over on a weekly, which is um, quite telling. I pay a lot of attention to these crossovers just because they don't happen this often. If you look at this, I mean, this is the 10 exponential has been above the 30 for what, 2 years? That's an enormously long time. Unlike MACD, and stochastic and so on, the 1030 crossovers are relatively rare in large markets like this, and when they do cross, they stay crossed for quite a while, especially on the weekly chart. So I pay a lot of attention to that. So Singapore not looking that great, and I see a lot of charts looking like this, um, where they're starting to be a lot more bearish. Um, uh, Great Britain starting to come together here. So going back, let's take a quick look at the core sectors. Hello, core sectors. Yes, core sectors. So we have the crossover. This hasn't happened in 6 months, and now we have a crossover in the S&P 500s on the daily chart. Not as telling as the weekly chart, but still, it's something. Here we got the money flow starting to um, keel over and go negative. Again, that hasn't happened in 6 months. We got the OBV dropping below the trend line. Again, that hasn't happened in 6 months, turning very negative. Good materials have crossed over on the 1030. We have energies have almost crossed over at the 1030. We have financials. They have crossed over at the on the 1030, and again, money flow, OBV, all looking pretty ugly. Industrials have crossed over. Technologies have crossed over. Consumer staples, which should not really be surprising, have again crossed over. Again, this hasn't happened in 6 months. Look at this, and suddenly it happens now. Money flow again negative, OBV negative. People are selling out of this market. Utilities, utilities is always a bit messy. Don't pay much attention to that, but utilities might be the place to be if this market actually does drop. Healthcare, well, healthcare, and consumer discretionaries. Amazing run up over the last 2 years. I never expected this. But again, it too has crossed over. So there's like all but one or two of these sub-indexes have crossed over. Looks quite bearish to me personally. Other charts that are of interest I found, again, the crude oil commitment of traders reports. The speculative stocks have taken a massive long position on this, and the commercials have taken a massive short position on this. Now, one of these two players is going to be wrong. Most of the time it's the speculators that are wrong because they're just momentum followers, and sooner or later they run out of momentum and the commercials end up being right. Once this rolls over and these guys have to liquidate their positions, look out below. Because they're going to dump an enormous amount of futures onto the market, and they're going to depress this market quite significantly if they are indeed the ones that will fail. But interesting, very interesting stuff going on there. I'm gonna keep it short today, but that's all I have for today. So I hope you're well. Hope you make lots of money next week, and good luck.